Hey, you know why I'm smiling? Because tomorrow's my birthday and you're invited. No, you don't have to bring me a gift or anything like that. As a matter of fact, I'll be getting you a gift. 3 stocks just went on the clock. That means they're hot on our radar and the countdown has set for tomorrow's entry. Tomorrow at noon Eastern Time, I'm giving you all 3 ticker symbols and the blueprint on how to profit. Click the button below to RSVP for my birthday now.
Hey everyone, I want to give you a little quick updates. This is Roger Scott. I wanted to show you something interesting. Why am I doing this? Because the S&P is making new highs or trading near all-time highs, actually at new highs right now. Here's the problem with this. Typically when the S&P makes new highs, everybody becomes really bullish and thinks the market's going to continue moving higher. I'm not seeing it. I'm seeing more congestion and a pullback to the 50-day line. Let me explain to you why. Number one, the RSI oscillator, and this is a really powerful momentum tool to figure out whether markets are overbought or oversold. It's right now close to 70. It's reaching 70. And if you notice here, the RSI, it's not very sensitive. It's not like the stochastics where every move the stock makes, it goes overbought or oversold. It takes a lot to get this instrument to generate overbought levels. That's number one. So RSI is telling us that the market's overbought. Now, if you look at small caps, notice small caps, and small caps have the most influence due to China. If you look at small caps, and this is 6 months, but let me show you a year. Notice for the most part, aside from this little meltdown we had about a year ago, but it was very quick. Notice we've been moving sideways, sideways, and we're right now at the upper end of that range. And if I put the RSI oscillator there for you as well, you will see that RSI is overbought here as well. So RSI is overbought on the S&P 500 and the small caps. And the small caps have no reason to go higher. Zero. I mean zero. There's no reason for small caps to go higher right now. There's no resolution with China. They're not looking forward to anything right now. Earnings are not really that much better than expectations, and the expectations have been weakened and have been lowered. So I'm not really seeing this major upside. Now, am I saying the market's going to crash, move south, go into bearish zone? No, I don't think so. I think the market's going to be stable. But I'm not seeing new highs. I'm seeing more congestion and consolidation. And finally, let me show you the worst part. This is the put to call ratio. Every time it goes to about 70, 85 or lower, it means the market's super complacent. That means traders are getting extremely bullish. That means retail traders are just buying stocks and thinking that the stock market's going to double in value. And when the put to call ratio gets above 125, that means everyone's scared. Retail traders are scared. So this is a contrary indicator that tells us when turning points occur. And usually when it's like between 120 and 190 or 85, I don't pay attention to it. It's random. But when it goes above 125 or below 80, that rubber band is stretched out. And right now, this morning, this is an end of day image. Right now, this morning, just a few hours back, it was at 70. I mean, look at this. It hardly ever goes there. And this is over, let me show you long term. So you guys can see this isn't just like, this isn't over a few days. This is over a specific period of time. Let me show you over 3 years, okay? Notice turning points. Notice every time we get below 80, what happens? We turn. It's like a rubber band. And we're there right now. So what do I expect? I expect Russell to huff and puff a little bit longer, maybe another day or so, and turn back down because the RSI is overbought. I'm expecting the S&P to stay around this area maybe for another 2-3 days at the most because of the flat top, and then come right back down and move towards the 50-day moving average. And I'm expecting the bond market, which you could see right here, and it's down quite a bit this morning. I'm expecting the bond market to start rising because it's also oversold. Let me show you this. So when stocks are overbought and when bonds are oversold, look at what happened last time it was oversold. It rallied from 136 to 145, and it's getting oversold again, as you can see right here. Doesn't happen a lot. It hasn't happened a lot this year at all. So this is not an indication that happens once every 2 weeks. This is like 2, 3, 4 times a year kind of thing. So you got to pay attention to this when it happens. So again, bonds are oversold, stocks are overbought. Put to call ratio is telling us that the markets just got too complacent, and the odds are the rubber band is going to move, snap, and sentiment is going to shift more towards the bears. Again, do I think the market's going to become bearish? Do I think we're going to fall? Do I think we're going to have a major pullback? No. But I do believe we're going to see the S&P 500 move back. Let me show you where, so you have a good little gauge. I believe the S&P is going to move down right up to this line, which is about the 295-ish level, maybe a little lower, but I think we're going to continue congesting and moving sideways, which is not really bad for the market because interest rates are low, and it's as long as we can remain there, we're going to move higher, but we're not ready for that yet.
Hey, you, I want to see you at noon tomorrow. Just tap the button below, and I'll mark you down on my guest list, and I'll get you a free gift ready to go. Plus, for 47 special attendees, I'm giving away something personal, something special from my vault. Yes, from my personal vault. It's going to be a lot of fun, and I look forward to seeing you there. Just tap the button below to register. Do it now. Don't procrastinate. It's my birthday. Let's have some fun together.